Hello everyone, welcome to Just Invest Today, man. And today we have to talk about Alibaba's earnings. It just came out today in the morning and I'm kind of excited about it. I think there's a lot of good news, but guys, there's also kind of bad news too. So we're going to break it down. We're going to get through this very quickly just to get you a nice, concise summary of what happened with Alibaba, because there's a lot to talk about. And the market kind of liked what happened with Alibaba. It's up 14% for the day. But don't get ahead of yourself. You know how Alibaba is. It'll be up 14%. In the next 2-3 weeks, it'll be down another 20% because of some news article that came out by the Wall Street Journal. So don't get too excited yet. We still have a long runway for Alibaba. And that's what I'm most excited about. The 5 to 10 year ahead of us. That's what you gotta look for. That's what you gotta focus on. Think about the destination of Alibaba and where they're gonna go. Let's first talk about their annual active consumers globally. They've reached 1.3 billion global consumers, which is amazing. They added 113 net adds for China just alone. So them being able to add that much in just China and then on 177 million globally, like, is insane. That just showing you they're increasing their customers. They're actually building a better network. And as they build a better network, that just builds a better moat in general. So this is amazing. And they already have a huge base already. So for them to keep increasing that just shows you how much value they're adding to their business and getting people to come to their platform. Alibaba's revenue was 9% for the quarter. And that was pretty okay. Not too good, not too bad. But when you think about it, Amazon did 7%, and I think their e-commerce business actually declined quarter over quarter. So take that in for what you want to say, because man, Alibaba is going through a lot right now, especially with the whole COVID situation. I think that still has a lot to do why the revenue isn't going like crazy, but still really good. And you have to take it into account. We're talking about year-over-year numbers. When you think year-over-year instead of quarter after quarter, because quarter after quarter, anything can happen. Year-over-year, 19% revenue growth. Remember, people are calling this a dying business with 19% year-over-year revenue growth. So that's very strong. I like that, even though the quarter was only 9%. But that doesn't really matter because in the quarter, like I said, anything can happen. This is where it kind of gets iffy. A negative 22% year-over-year growth in the income from operations. But they said this was due to an anti-monopoly fine that they're actually bringing into this quarter. So they didn't fully pay it off. I think they now are finally fully paying that off. And plus they have COVID restrictions. I'm kind of giving them a slight pass for that, but we still have to look for that into the future if we can still rely on that when that kind of gets settled. And even with all of that, their business is still declining. Their income from operations is still declining. And that's where my biggest worry is. The customer management revenue. That doesn't seem to be growing. All the advertising income doesn't seem to be growing a lot. I'm not sure if that's due to the environment. So that's what we have to keep looking out for, because that's going to be key to our thesis. If that doesn't move, if that doesn't grow any amount, like it just keeps staying the same, then we're going to have to be kind of worried about that, because that generates so much revenue for Alibaba. Yes, we got to be kind of worried about this negative 22%, but still, I still see positives into the future. I think this is good. I think they will be able to fix this in the future. So let's keep going. Their expenses is up from 66% to 68% for the quarter, 57% to 62%. That doesn't even seem like a lot. So they are actually doing the good thing. They are explaining in their presentations that they're going to keep their cost efficiency high. Like, they're looking at their costs. They don't want to keep costs going crazy. Their goal is actually to generate more gross profit and a gross profit margin. So we're going to see them actually kind of cut down on all these expenses where it's not needed. And they said that many times in this presentation, that they're going to cut down expenses, which is amazing, because we want these operating margins to get better, more profitable, more money, more income. So all the sales and marketing, cost of revenue, product development, general administration, even the general administration is down. So you're seeing they're doing a lot of cost cutting, but they're making sure it's efficient. They're basically cutting all the fat off. So that's very, very positive. And then we have to get to the cash flow into the balance sheet. Again, the cash flow, holy, it was negative. I'm not gonna lie, negative 43% year over year. They are saying from the anti-monopoly fund that they got, plus the background of COVID, which is hurting their business, and they're reinvesting a lot of money back into Thai Sai and Tabo deals. So let's see what happens with those two businesses. I love the growth in those businesses, but they're still not really profitable. They're still not doing much, but still, we can kind of see into the future and saying, wow, they're providing a lot of value. And that's where we have to see the destination of this business. Moat is getting bigger. They're getting a lot of new customers, which increases the network. They're adding a lot of value. They're omni-channel, the hybrid, offline, online, fresh shippo. They have Taobao, Tmall, then they have group buying, then they have those deals. So they have a lot of different aspects to their business that you can kind of see the value, and their logistic network is just getting bigger and bigger. So their value proposition is amazing. So that's why I love the company and I love Alibaba, because where else can you get all that value in one company? It's unheard of. It's almost impossible. They're repurchasing a lot of shares, and we're going to talk about the repurchases at the end of this video. So the net cash went down to 54 billion because they're repurchasing a lot of shares. They're doing a lot of investments. So they still have an amazing balance sheet. We don't have to worry about the balance sheet. We don't have to worry about them going bankrupt or doing any crazy bad things, because they're still generating 15 billion of free cash flow. This next segment, Alibaba breaks down the business sectors and how much they've grown quarter after quarter and after year. So when we're looking quarter after quarter, China commerce 8%, international commerce 7%, local consumer services 29%, CNOW 16%, cloud 12%, digital media 1%, which is kind of decent. But when you look, you gotta take the big picture. When you're looking year over year, 18% for China commerce, international 25%, consumer services 23%, local CNOW 24%, cloud 23% year over year. So still strong growth, even though quarter after quarter cloud only grew 12%. But they have kind of explanations to this. We're gonna get to it in the end of this video. So there's still a lot of runway for Alibaba, in my opinion. So let's get to the summary of this whole quarter and tell me, what do you think about it so far? Do you like it? Do you dislike it? Are you worrying about the consumer management revenue like I am? Because that does generate a lot of income for Alibaba, and that's how they generate so much money with their advertising. So that's my worry about that. But let's get to the quick summary. This was all said during their earnings call, so let's break it down really quickly. So this is going to be the summary of the whole quarter for Alibaba. This was the most important things for me. 1 billion active annual consumers in China, with annual net increase of 113 million, with 131 billion active annual consumers, with annual net increase of 117 million. So amazing, increasing their customer base. Alibaba Cloud revenue grew by 12% year over year. The growth deceleration was a result of several factors, including decline in corporate activities, the delay in project delivery due to the impact of COVID restrictions, slowdown in growth of internet industry customers, and the gradual termination of contracts by a top customer of our public cloud services outside of China. So they have a lot of headwinds. People are not spending a lot of money during this bad back phase regarding the whole China economy and how it's slowing down and how this zero COVID policy. So there's a lot of interesting things happening with cloud. I think this is temporary. That's why I'm so excited, because Alibaba still has 37% of the cloud market. Can they keep that? Can they grow it? Is that gonna decline? Who knows? But damn, if they just kind of maintain that, or if it goes slightly lower, man, the future is so bright. Because look at this. Industry estimates China's cloud market size will reach 1 trillion RMB By 2025, Alibaba Cloud will continue to elevate its core technology and products to maintain its leadership in its highly potential market. And that's what we love to hear. So now they're talking about cost control and operating efficiencies. They're cutting back on the unprofitable businesses, and they're going to improve their gross profit, the gross margins. So that's amazing. The anti-monopoly fines affected the income from operations, and COVID affected it too, but still they had a decline. The business did decline. So that's where I'm worried about. The advertising, the CMR and GMV only grew by I think like 5 to 6%. So it wasn't a whole lot quarter after quarter, but still I think this will still recover into the future. Why the economy kind of settles down? Because the government is actually saying that they're going to improve the economy. They're looking forward to kind of giving it more balance, as they kind of killed it 2 years ago, a year ago. So if the government is saying that, plus Alibaba is confident in their business, I am confident that they can kind of get this back into play. Tao Kai Kai and Taobao deals, they're really focusing on that right now. So let's see what happens with that. It's actually getting to be more profitable. And guys, oh, I forgot about this. Cloud just generated its first profit. So looking forward, that's going to do a lot for Alibaba's business if they can kind of keep that streak of becoming profitable for those businesses. Lastly, amazingly, they talk about their share repurchases. This is so key, because if they can repurchase all their shares, or a majority of their shares, because the stock is just so cheap and they have a lot of cash, even their long-term investments, like no one even really takes that into account. But that's part of Alibaba. We have continued to enhance returns to shareholders through share repurchases, given our strong balance sheet and free cash flow generation capability. In fiscal year 2022, we repurchased approximately 60 million of our ADSs for approximately 9.6 billion under our share repurchase program. Amazing. On March 2022, our company's board has authorized an increase of our share repurchase program for 15 billion to 25 billion. Since April 1st to May 25th, we have repurchased another 3.5 billion in ADS. As of May 25th, we will still have an unused amount, 12 billion under the share repurchase program. And as long as the shares get cheaper, they're just going to be able to buy more shares. So come on, Alibaba, get cheaper. We are just going to buy more of the company, and that's what the CEO is telling you. So it's amazing. So let's end this here. The results of Alibaba's strong management operation. So this is their summary, and this is what I like about how they kind of ended this. Alibaba's strong management and operations over the years has produced a high-quality customer base, sophisticated digital commerce infrastructure, and world-class technology innovation. We also have multi-engine growth strategy, robust financial conditions, and a profitable business and a strong cash flow. These provide important assurance in the face of macro uncertainty, and more importantly, a source of confidence as we continue to pursue healthy and sustainable development for the future. So guys, that's it. That's the wrap for Alibaba's quarter. Guys, tell me what you think about this quarter. Are you down on it? Are you bad on it? Do you think this is a good quarter or a bad quarter? How do you think about this, man? But at the end, we're thinking about the destination of Alibaba 5 to 10 years out. Quarter after quarter, doesn't really matter. 5 to 10 year span. So guys, tell me down below. Like this video, comment, and subscribe. Peace.